Hey guys, welcome back to the channel. In this video, we're going to talk about my top stock picks for the week of May 9th through the 13th. Before we do, just to reiterate, not a financial advisor, make sure that you do your own research before investing. Also, if you find value in today's video, smash the thumbs up button, subscribe to the channel if you enjoy our content, and hit the notification bell. That way YouTube can let you know every time we release new content. Other than that, let's dive right on into it. Alright guys, so today's video is going to be a little bit different structure-wise than we're used to for the stock picks. Okay, the last couple of weeks I've basically had the same picks, and I'm going to be honest, I kind of have some of the same ones coming into this week, but I want to look at the overall markets in general for this upcoming week. Okay, I want to look at the S&P 500 on a short-term chart, and I also want to look on the longer-term chart and see if we could potentially have more downside. Is this the bottom? What do we do from here? Things of that nature. Okay, we're going to also look at the VIX. We're going to take a look at the Fear and Greed Index. We're going to just kind of get an overall feel of what the markets are going to do and why the markets push so far down to this point. All right, that's what we're going to do here today for the stock pick. So for myself, again, Tesla, TQQQ, I think those are the two things that I'm eyeing the most. Like I said in a video last night, if you watched the Zion Oil and Gas video, that I did buy some over the last couple of days on the way down, and I'm going to buy some more if they continue to come down to average down. Okay, I do have some cash on the sideline, just waiting to watch, and if they continue to start coming down, I'll buy more. If they start shooting up, then I'll leave them alone and see where they go from there. All right, so we're looking at the S&P 500. This is the 180-day 4-hour time frame, and you see here, if you're familiar with the Fibonacci retracement levels, you see that we are at the very bottom, and we seem to be sort of finding some support down here at this level here. Okay, I honestly thought that we could see some more downside, and I think we can see some more downside just based on the technicals of what it's showing me here, because we have cooled off. We gave all the gains away that we earned after the Fed meeting. We shot up right after the Fed announcement, and then we gave it all back. Okay, every single one of them. So I think that we could go a little bit lower, maybe down to that 4,000 level. As you see, we actually busted through below this fib level, so that needs to be updated as well. Is we came and actually broke through the bottom of that Fibonacci retracement level, which shows that we could have, and you'll see here in a second, we could have some more downside coming on Monday before we start to recover. All right, I'm going to redraw this here. See, 48.18 is our top here, and then we'll come back and look. So we do have a little bit more room to go, but you want to see 40.6251. That's that key support level on the short term that you want to see if we're going to bounce off of and come back and maybe retest this 4,200 level is what we're watching for at the S&P 500. I mentioned TQQQ. I'm going to show you the chart on that. This thing is extremely volatile, so just know that if you get in, when it moves up to the upside, it moves very fast, but it could also move just as fast to the downside. Okay, hit a low of 33.10. We're close to undervalued, but again, just continue to nibble until this thing starts recovering, because once it does, and once the markets overall recover, then we're going to be moving pretty quick to the upside. So we're pretty close to the bottom of the fib level. We could go down to as low as $33, but as long as we bounce off of here, I feel pretty confident that we'll come back and at least retest this this first level of resistance of about 45, $45. My average cost is in the 30s, so I'm looking to, on this swing, sell out at about $45 to $48 once it gets to that point, because I don't know if it's going to get rejected at that red SMA line, which is right at about 49.21. We'll take a look at Tesla, if my chart will load. Okay, there we go. So here's Tesla. Taking a look at that, and like I mentioned in the video yesterday, I did a technical analysis video yesterday, and the fib level could update sometime next week and bump all the way to about 700 as your low, as opposed to 671. Currently 671 is the absolute floor. We broke below that 890 level. We're close to undervalued, which makes me think we're due for a little pop to the upside, but not before coming back down. We could test 800 on Monday if we see that the markets are going to be red. We got some more markets selling off. We could hit 800, and I do think that's going to be our floor here for Tesla before we shoot back up to the upside. Just my opinion, unless some type of other catalyst comes out to kind of spook the markets, or if Elon Musk does something else like sell shares, that's going to, you know, freak people out, make them mad, start selling Tesla shares as well. So those are the stocks that I'm eyeing into next week. And of course, Zion Oil and Gas, everyone knows that if you watch the channel. I'm looking to buy some more next week. It is an absolute gift that it fell down to the low 20s again. And if it falls down to 20 or below, that's oh man, that's going to be crazy. But I'll be gobbling some up next week for sure, to average my cost down and get ready for the next move to the upside. All right, guys. So before we look at the VIX and we look at the Fear and Greed Index, I want to take a look at the S&P 500 dating back to 2020 and to now. Okay, this is going back to the COVID crash of 2020 up until now, what's going on here, to kind of give you some perspective on the fact that we may see some more downside and we might just be getting started. Okay, so you look here, we're trading along at about 33.86, and man, we fell all the way down to 21.91.86. So roughly about a 36% crash, move to the downside, and that was probably one of the fastest crashes you'd probably ever see. I mean, it was just a straight move to the downside, and then all of a sudden the Fed comes out, says about the quantitative easing, and then here we go, we're off to the races, right? We kept moving and moving and moving, and then here, like in 2021, it was not. I mean, you had a little pullback, and then we recovered again. So to me, this is kind of normal and healthy overall for the markets to pull back and correct. But as you see here, we just broke below the first level of that red SMA line. I'm sorry, not the red, the Fibonacci retracement level. We're trading below the red SMA line. So we could come down and test that 38.15 level overall. And then your next level down is 3,500, then 31.95, 27.53, and then 21.91.86. I don't think we'll get all the way down here because that's given us, given every single gain back that we've had over the past couple of years. I don't see that happening. But I think 38.15 is a real possibility if we have a red day on Monday, and that'll be the next really solid level of support that you want to take an eye on and look at, because overall we're in a bearish pattern, and we're not even at undervalued yet on this chart. So when we get to undervalued, I think we'll be more confident to come and see that a little move to the upside will be coming. But I don't think that happens until we get to about 4,000 to 3,900, which makes me think that if we come out Monday and we sell off, have some more downside, we could get somewhere closer to about the 4,000 level before we see some type of recovery. But just keep in mind, 38.15 longer term Fibonacci retracement shows that that's a key level of support there. Okay, that's for the S&P 500. Now, keep in mind what happened here. We dropped 36%, and we went higher than we've ever gone, okay, for a long period of time. It was just a constant uptrend for the past couple of years. So the markets historically will recover and continue to move higher even after a crash, because it's going to provide a bunch of buying opportunities for a lot of great long-term investors to come in and buy up for their long-term portfolio. Okay, guys, so looking at the VIX, this is VIXCentral.com. We're currently at 30, and we are actually in the positive right here. Anytime you're in the negative, you know that you're going down, but right now we're right above into the positives. You want to see this number here, this VIX number, down to about 20 or below. Market's very, very volatile, right? So you could continue to see the VIX kind of go up and down until we settle and make a decision on where we're going. So we're looking at the Fear and Greed Index here. We are currently in fear, close to extreme fear. If we go down Monday, then we're going to be in extreme fear, which shows some fantastic buying opportunities, which typically signals that we're going to be starting to move back this way here, because people are going to come in and start buying and adding to their longer term portfolios. Okay, so one more thing I want to show you, Shiba Inu. All right, this is also creating some good buying opportunities. Look at this price here, guys. This is a fantastic way to or time to average down if you've got into SHIB while whenever they had that initial spike. If you're looking to start building your position, if you're looking to add to your position, in my opinion, this is a great time to do so, because it's been getting beat up over the past several weeks. And it shows here 405 million SHIB burned over the last 24 hours, 25 billion SHIB burned overall currently, okay, after that burn portal has been open. And that's what we're doing here. Is main thing, SHIB is burning and burning and burning. And then whenever we have that next big move to the upside, those of you who have gotten in at these levels and have been accumulating, you're going to be able to reap the benefits and the rewards and just kind of sit back and watch it take off, okay, because they have less circulating supply, just basic supply and demand, okay? All right, guys, so that's my video for this week. Let me know your comments below. Hope you have a great week ahead. Other than that, we'll catch you in the next one.